to Stewart. Stuart, if you could just give us a few minutes on you and your background.
HCL is a proud sponsor of today. We are a company, IT services company, 90,000 people, 32 countries, and a market cap of 6 billion. But more importantly, if we change that word to customer experience in IT services, we started an experiment in 2005, which was to ask ourselves, what business were we in? And the answer was, we are here to deliver differentiated customer value. The question then became, who delivers that value? And the answer was the employees who work for customers who work for HCL. So where HCL people work with customers, that's where value gets created. The question was, if that's true, what is the role of management? And the answer to that was, the role of management is to enthuse, encourage, and empower those employees to deliver the value at the customer interface. Why is it that we said that most initiatives on cultural development or cultural revolutions fail? Because employees do not trust management. So we said as a condition for this to work, we had to push the envelope of transparency as a means of inviting trust. And lastly, we said if this works, we should be able to measure the customer value we've delivered in excess of contractual commitment. And so we created things like value portals, which we sign off together with customers on the tangible value that's been delivered in excess of contract commitment. So this is a journey that's been 5 to 7 years in the making. It's actually been written up in a book called Employees First, Customers Second. And so the title is almost an oxymoron against what we're talking about today. But where customers are concerned, in our opinion, if you put the value in the employees, they will deliver the value to the customers and in turn shareholders. It's now a Harvard Business School case study and a London Business School case study on customer experience management. And the metrics associated with that on differentiated growth on EBITDA, revenues, customer satisfaction, and employee satisfaction are all in the book. So I just thought it'd be interesting in terms of today's context. I would recommend that you at least have a look at Employee First, Customer Second as a book. We don't offer it as a service. We don't say it's right for everybody, but it sure as hell has been an interesting experience. Thank you.
Great, thanks very much, Stuart. So actually, I'll kick off with the first question, because that's a really interesting point on what First Direct have done. And as I understand it, and please expand, Mark, it's about giving the employees the empowerment to make decisions in a timely manner to get back to customers when they're speaking to people on the phone. So they are absolutely related, not quite an oxymoron, but do you want to expand on that at all, Mark?
Certainly. Empowerment is one of those words that kicks around all industries, I think, to the point where, frankly, it's just chucked out in conversations as it's a really great idea. But it's got a hard edge to it in banks, and the hard edge to it is the amount of money that you're going to have to write off every year because you took a decision to empower staff and your people to make decisions, which is why it's not that prevalent, especially not on front line. But we've designed a system which entirely depends upon the problem that the customer brings to the organization being solved at the first point of contact. And so if I give you a stat, 86% of our complaints are solved at the first point of contact. They never become any, we still record them as complaints, but they never become, they never fall into the financial ombudsman sort of monitoring system. They don't go anywhere. That is only possible. It is only possible if you are willing to trust the most junior person in the organization. In many cases, in our organization, that's the guy who's answering the phone, to make decisions about your money. And if you're not prepared to do that, and and there are systems and controls that we put around it, but we're not standing over somebody's shoulder saying you can't do this, you can't do that. It just doesn't. So there's a system that governs it, but ultimately, if you're not prepared to make that decision, you don't get that result. And the point is that if you don't value that result, you'll never make that decision.
Just a curious question from my perspective. Do all of those conversational interactions get recorded for regular? I mean,
yeah.
Okay.
I mean, we're in an industry where frankly, we can't sneeze in a conversation with a customer unless it's recorded. But we don't have scripts. So there are no scripts for interactions with customers at First Direct. And in that respect, everyone who you speak to is making it up as they go along, which is reassuring. But we don't fly airplanes, so don't worry.
Brilliant, appreciate that. So I think the important thing is for you guys to get value out of this, to take some questions from the audience. So who wants to go? I think it's second, because David was first. Here we go, we've got a question here.
Kerry Chapman from TCS. I'm interested because obviously in Rob's situation, the product's been sold by someone else, and as you say, the only point of contact you have is a distress call. So I'd be interested in your sort of, customer satisfaction type metrics, and and it's difficult to get a net promoter score in some ways, I suppose. But where you see your value add in terms of metrics.
Yeah, sure. It is difficult because my business does not follow traditional Reichheldian principles. All of that stuff goes out of the window. Our brands that entrust their brand with us obviously are using standard techniques of talking to the customers who've had a claims experience. We're also compared quite rigorously by our regulator against other experiences out there. It is difficult, and to some extent you have to have. And this is why we've gone back to this failure demand, seeking failure demand type of approach, because it is actually very difficult in my context to ask customers what it is they want from a claims experience, because frankly they don't know, because they don't know what sort of claim they're going to have and how it'll play out. So this business of just watching the customers as they flow through their business and making decisions on that was something we'd rather didn't happen, and that was something that we quite liked happening. Is a constant journey and keeps us moving forward.
Also, with Mark talking about trust, in the insurance area, obviously you with the fraud that's out there today, you're probably looking at quite a hard edge in some ways with your dealings to make sure you're not having a fraudulent claim. Whereas the other panel was also talking about trust. So again, that must be a relationship issue for your kind of business compared to the other panelists. Maybe they could comment as well.
It is. And I think this is where Ageas differentiates itself somewhat from some of our competition, in that we haven't gone out in the last 3 years and said, oh, there's a recession, therefore every customer is trying to be fraudulent. We put a lot of trust in our people. We give them the tools to help them establish whether there's a possibility of fraud. And if those tools show green light, then get on with it. Just do it. We have something in Ageas called, it was invented by me, I'm afraid, and I'm not a very creative person, so it's got an awful name. We call it predicament management. We allow our agents the time to try and understand the predicament that our customers are in when they call us up. So there is no such thing as an average claim. This is a completely bespoke claim that you're having, and is going to be completely different to a claim that everybody else is going to have that day. So they're empowered to do things that will settle your claim in a way that will help you. An example of that might be, we had a gentleman who had a heart attack in India the other day on one of our travel policies, and we needed to repatriate him home to the UK. Now, normal medical repatriation is in a very small jet that you can't stand up in and is very claustrophobic because there's all machines and people doing things to you. And he was claustrophobic. He could not possibly come home in a repatriation jet. So my customer agent, without any reference to a manager or a team leader, booked a first-class ticket on a BA flight and bought £6,500 worth of medical equipment to sit in the seat next to him. So bought 2 seats. And that person came home very much happier with their family, because the family couldn't have gone on a medevac plane, and was a much happier bunny, despite the fact he'd had a heart attack, which is not a nice thing, when he got home.
Interesting. Who's next? There we go.
Alistair Willem, Virgin Money. The question I have is, what does single customer view mean in your organisation? And if appropriate, what are you doing about it?
Who wants to take that? John, Terry.
Well, I'm not quite sure what the source of your question is, Alistair. Hello, by the way. Hi, we used to work together. I guess there's different perspectives to me. If you think about it from a customer point of view, single customer view, for me is about something that we would say is, you know, in dealing with 15 million customers, do we understand all the relationships they have with us? Do we understand the engagement they've had with us? And what they've been doing recently in their activity and experience with us. So we have something called a CIS, a Customer Information System. That Customer Information System includes the information about every single one of our customers, every one of the 15 million, and their multiple relationships they have with them. So if anyone is dealing with a customer, they can use that information to see the full range of services they've got. They can see things like the recent activity on their accounts, they can see recent contact history, they can see things like recent promotions that we've sent to customers. So that single view of the activity that we've done with a customer is a real value for us in that respect. So I'd say that we use single customer view and the experience that we're creating through the technology that we've invested in to ensure that our advisors there, for our agents, our frontline staff who deal with customers, can have a sensible conversation about the breadth of what they do with us. And I think that's really critical. Often I think when you get to large-scale financial services, you can become quite siloed as a business and therefore run multiple systems and data where your customers aren't joined up as a customer. They're treated as products and therefore they have different systems, etc. to do that. We've invested heavily in creating that single view of a customer, and it's called a customer information system. It's not called a product. It's about the customer, and therefore we use that every day in our engagement with our customers to understand the range of activities they've got with us.
We had a customer in the US who was voted the #1 for customer experience by an independent survey last year in 2011. And when we asked them that question, they said very simply, their idea of single customer view is that you should be able to begin a transaction in any one of the channels and complete it in any other channel. Full stop.
I'm probably going to be the one that sticks out like a sore thumb every time. I physically can't have a single customer view because all of my customers belong to someone else and I can't put them all together.
Do you get information that flows down from those organisations back to you about other touch points in Tesco's, etc.?
Very rarely, because essentially I sell a commodity. I sell a commodity to those brands too. And the brands very rarely are prepared to invest in those sorts of links. Because they assume that in 2 or 3 years' time, when that particular contract is up, they'll move it to someone else. They tend not to once they're with a GS, I'm very pleased to say, but that is kind of their expectation. So they just won't invest. I even have one of my partners that I don't necessarily know when someone rings up to make a claim that they even have a policy, which is an amusing situation.
I must remember that.
I won't tell you which one.
And Mark, your single customer view is probably easier from your perspective, but do you get an HSBC view on touch points?
You know, colleagues have already said that it's one of the most elusive and challenging issues in banking, and it's challenging more so now than arguably it was a few years ago, because in the industry over the last 3 or 4 years, the banks have had a massive focus on balance sheets. So the temptation is to drive a business through the balance sheet, and there's a whole bunch of reasons that explain why that's a pretty wise thing to be doing at the moment. But in that, you still got customer relationships. So you got balance sheet product customer, which is a very much sort of conservative bank out way of looking at the world, as opposed to customer product balance sheet, which is awful. It's just an awfully more difficult challenge. And one of the reasons it's a challenge, at least from a customer in point of view, is that the customer decides when the customer wants to interact with you and what the customer wants to buy with you. And so you can make a decision about a customer value at a point in time that is based upon an immediate context, as opposed to their future value, future potential, or their historic relationship with you. And I can't be glib about the answer to that. That is an extremely difficult thing to engineer into a, if you like, a mass or scaled operation, so that it actually feels real and seamless every time you interact with the brand.
And you made the comment actually earlier that technology is also one of your biggest challenges. Is that related to that, or is it something different from that?
I think technology is an inevitable challenge, but I don't think it's particularly unique to First Direct. I think that the job of our people is to try and ensure that the intimacy or relationship with the customer is preserved irrespective of what platform they're trying to engage with us on. And that requires that the continuity of the relationship at the top of the house, the brand level, is preserved. Tone of voice, for example. People have talked about empathy and talked about humanity. And those are important because from the customer's point of view, that creates a continuity and a singularity of relationship, even if the underpinnings don't always deliver it nice and seamlessly and interesting, nice and seamlessly and beautifully. Because hand on heart, we have challenges as an organization. I'm sure I'm not alone on this, or maybe I am, when it comes to joining up all the various different pieces of the relationship.
Good, thanks for that. More questions? Keep going. On there. And then there's one right at the back. So.
Hi, it's Jonathan Clayton from Saffron Building Society. Not surprisingly, a question for Terry, if I may. I was just interested in the difference, in particular the challenges around that customer orientation from a nationwide point of view, as opposed to somewhere like First Direct, where that was sort of architected in from the start, where I would imagine at Nationwide it was far more of a sort of a transformational program, and you much more of a move from one place to another. It's probably a too large a question for a Q&A session, but it seems to have a particular challenge around transformation program as opposed to architected in from the start.
Well, I guess my argument would be it's been architected into the DNA of the company for 150 years, because building societies were based upon providing a service for customers, only for customers. And that, we weren't there to look after shareholders' needs and all the dilemmas that creates. So my argument is that actually we haven't had to do a transformation program that's about customer centricity. It is the DNA of the organisation. I think what we needed to learn was how do we recognise that and bring it to life. And that's when I talked about the pride stuff that we did, was actually we all knew it was there and it was inherent in how we operated, but we'd never brought it to life in a way where we could all consistently say, yeah, that is us. So it wasn't a transformation program, it was actually a way of trying to bring it to life so that we could all live and breathe it with some understanding and common language. But it certainly wasn't a transformation program, because I think it is embedded in the roots of building society history, and I think it would be the same in lots of other building societies or mutual businesses, where the customer is at the heart of what you do. So it's not transformation per se, I think it's how we have worked, I guess, over the last 15 years, and I think going back to the times when you all remember carpetbaggers and people who wanted to convert building societies into banks, I think that made us wake up and really recognise and remember and bring to life. That's what we're here for. We're here for our customers, and therefore that drove a lot of the activity within the organisation that said, actually, we need to make sure that we do this through facet and a description that we can all tune into consistently. So I do think it was in the DNA. I think we had a kick up the arse with what went on with carpetbaggers that gave us that way of bringing it to life consistently, but it has always felt to me as though that's just the way we do business.
Good, thanks. I think we've got, should we go at the back? I think there's a lot of people at the front. Sophie, do you want to just grab the couple back there?
Hi there, this is Sean Tomlinson from Stereo. As a customer, the only real measure for me when I talk to my bank is, has my problem been solved? I'd like to ask each of the ones on the panel, what's the most important measure for them as an organisation, and how do they measure it?
Good question. Who wants to kick off? We'll go right to left this time.
I look, what metrics do I look at, our most important measure? I look at customer satisfaction, but beyond that, the most important one for me is customer recommendation. Our customers, have they recommended or will they recommend? More to the point, the harder one is in the last 6 months, and we tested every single month, what proportion of the customers that we sample have recommended First Direct in the preceding 6-month period. And pretty much most of the research that I've seen on this will tell you that there's a personal stake in a recommendation decision. It speaks about the recommender as much as it speaks about the recommended. Because it says something about your character, and you're putting your character on the line when you say, yeah, you should do this, you should try that. So it's a pretty stern test about whether you're actually delivering what it is you believe you want to and what you're talking about in your own organisation.
Again, probably might be slightly different to the others. We don't have a set of KPIs in Ageas. We measure everything and try and understand any variances that we see. So from one day to the next, the thing that perhaps is worrying me most will change. But from a customer point of view, one of the key metrics that keeps on popping up is how many times a customer has to contact me to settle their claim. By and large, and I think hopefully some of you will nod when I say this, people don't want to have a relationship with their insurer's claims department. So we try and keep the relationship as short as possible. We try and not interfere in their lives as much as possible and help them to move on from whatever incident they've had.
I think for me, it sounds a bit of a glib answer, but there's no single measure. Large financial services businesses, there's a basket of measures that you would look at. And absolutely, as Mark described, we look at customer satisfaction and recommendation rates, but at the same time, you've got to run a business as well, commercially, haven't you? So you would also look at the financials of the business. You would look at other things that are key to the specifics of your organisation. So, we have a basket of measures that we use, and that will be a balance between customer, it will be a balance between financial, the risk management of the business, and also the transformation of the business. They tend to be the 4 areas that we focus on within our set of measures.
I used to work at the Prudential many years ago, and the metric there was that it cost on average 3 times as much to get a new customer than it did to retain one. So one of the key aspects, I think, in financial services is not just the acquisition of new customers, but the retention of existing ones, because the opportunity to develop those relationships in future is disproportionately valuable.
Good, thanks, guys. One more at the back.
Manuela Pifani from RBS. A question for Mark. You said that you got no scripts and no IVR. So how do you ensure that your staff are adequately trained to deal with all requests and deliver a good customer experience and solve queries at first point of contact?
It's a great question. The fact that we don't use scripts and IVR doesn't mean that we don't train people, so don't be quite as alarmed as you might otherwise be. It's a big challenge for us to train people, because I think some of the speakers mentioned earlier that in big systems, the tendency is to segment roles and segment jobs into smaller bite-sized pieces and then create different teams that specialize in different parts of a process. There's a whole bunch of economics that drive that sort of thinking. The challenges it creates is clearly it creates more handoffs, and the banking industry is not great at doing handoffs, and frankly most industries are not terribly good at it. So baton passing and dropping batons is a big issue. And the other problem that it creates in answer to this question is a loss of employee engagement. The reality of it is, if you recruit good people and you give them rich jobs and varied jobs to do across a spectrum of different tasks and responsibilities, you'll drive higher engagement, because they're not sitting producing widgets every day. That they're using their full skill range to come to work and give service. You have to make sure that you're not selling products that are too difficult to understand for your average customer, your average employee. So we are mindful of the number of products that we're asking people to understand and learn about. We're mindful of the complexity of those products. And I get asked quite a lot about whether we should be investing in investments as a proposition. And it raises a big question mark for me, which is, yeah, we've got customers who'd like to buy that sort of product range from us. But unless and until I can absolutely guarantee that we can service that proposition properly on the phone or online, I won't do it, because that will just destroy a formula that already works today. So there's no great secret in it. We have an intensive training program, but the thing I'd like to point out is that the breadth and range of the job design is wider than you're going to find in your average call center, and frankly your average bank. And you've got to design your products and design your system accordingly so that it becomes easier to be successful, and to do it without one eye looking over your shoulder wondering whether you've missold something or whether you've not got it right, which is a big challenge for us.
And presumably you get increased employee satisfaction with additional responsibility, and that's why they're recommending more of their friends to join, etc.
It's a virtuous circle.
Yeah.
It's a virtuous circle. We've got metrics all over our business, and the old, I think, Churchillian adage is what gets measured gets done, what gets rewarded gets done repeatedly, and we kind of play that rule, or we play into that insight. But what you don't do is you don't use those metrics to oppress people. You can very quickly get lost in the idea that you measure so much, and especially with a direct business, it's a beautiful thing because you've got such brilliant transparency and visibility of what's happening in your organization. The temptation is to intervene on far too many metric points, and what you've got to do is you've got to stand back and trust that the recruitment and training and coaching process that you've created for your business, it works. And there are people who can make it work much more effectively than me fretting about it.
I'd like to add to those excellent comments. I think we go down a similar array in Ageas. I think the hardest job in Ageas is the team leader, because a traditional team leader in a call center will be given 10, 15, probably too many targets to reach this week, and will then literally bash the people on the phones over the head, and you'll say, you must stay on script, you must do this, you must do that. And the people, it's not surprising that you have 40, 50% turnover in call centres. The team leaders have to be able to stand back, be aware of what's happening in that team, and collect information on failure when it happens, but not use it to bash people over the head. Sort of try and understand why that person was led into a mistake, and then help them get back out of it again. It's a pretty tough job.
Good, thanks. Any other questions? Keep going, we've got one here.
Hi, twofold question really. It's Sarah Lyons from AXA Wealth. I'd like to understand from Rob whether you differentiate your service according to the brands you represent, because we heard a lot from Mark and Terry about how important your brand was and your internal engagement programs to deliver an outstanding customer experience.
Good question.
It is a really good question, and the answer is no. Insurance is a commodity. There is very little difference between one policy and another policy depending on where it comes from. So by and large, the brand, John Lewis, Marks & Spencer's, Tesco, whoever it might be, attracts a certain portfolio of the population. Price is hugely important, and more often than not actually trumps brand in virtually every circumstance. But we customize our service to the individual, not to the brand. So whatever the individual needs when they claim, that's what they get. It's not dictated by the brand. Clearly the brand are not going to want us to be rude, disrespectful, or shaft their customers. So those are kind of hygiene factors. After that, it's about how we get each individual as they come through the door settled and back onto the road, or back into their house, or back home from India, whatever it might be.
And just to expand that question actually out to a couple of you, is, you know, at what point do you see the tipping experience of a great customer experience versus, you know, commoditized pricing and competitive nature? You know, is there a tipping point between customer service and product price? I'm thinking particularly First Direct and Nationwide. You know, how do you balance those two?
Well, I think in financial services, some things are seen as commodities increasingly. Yeah. So often in the insurance side, customers will think of a lot of insurance products as commodities. And the first point of call often for customers now is comparison sites, isn't it? And they go and look for things on the comparison sites. They will often then come and talk to you as a business just either to fine-tune that or to work through the detail of that. And they still need assurance still, despite, you know, using the comparison sites. So there is increasing commoditisation in terms of price value for customers. But I still think customers want to have that contact with you and still work that through. So often people will have done their homework and they'll come pre-prepared to you. It says, I've seen your prices X or Y or Z. Can you now tell me about? So I still think there's a balance. It's not all just about commodity and therefore it's a simple purchase. Often customers still want to talk to somebody at the end of doing their homework or using comparison sites, etc. But we have to recognise that, you know, customers are becoming more savvy themselves in that respect and are prepared to do the homework. In long gone are the days of customers who just doff their cap to financial services, thank God. You know, they come pre-prepared with high expectations, high demands and wants. and they're increasingly savvy about the facilities out there. It does vary by product set though.
Yeah.
So there are some commodity products, but there are some complex products. Mark talked about investment. Mortgages are still one of those areas where customers often need support and help. So I think you have to be prepared to deal with both sides, really. Any comment, Mark?
I mean, I'd echo the comments. I don't know what the tipping point is. I don't worry a huge amount about the tipping point. Like any institution, like any brand, we try to be competitive, and we compare ourselves, across a range of products on a continual basis. It's not what drives. I wouldn't say that there was we're not a price-led strategy. It's never something that we've had as an institution, and I can't see a future where that would be an underpinning part of First Direct's ethos. Having said that, we serve high-value customers, and guess what? They didn't get to be high-value customers because they're price indifferent, quite the contrary. So you're caught between the hammer and the anvil of having quite an expensive service to deliver, but without branches. So it's not that expensive, but equally you're serving customers who are very well informed and are pretty price sensitive. We try and stick to the ethos that drives the brand, and worry less about being picked off on individual price points. That's just going to happen. And frankly, an ex-boss of mine once said, you can't allow yourself to bark at every passing car, because what you'd be doing, you'd have schizophrenia. And we have a strategy for customer pricing, which is a value management or value-led strategy, and we try to stay true to it, and we have a strategy for our brand and our behavior. I think Tamas made a great point earlier, which I'd pick up on, which is the context changing all the time. What today's commoditized product is not necessarily tomorrow's commoditized product, because when you informate a product that hitherto was a fairly sort of black and white thing, and suddenly, money management, for example, or the visibility of payment behavior, suddenly managing a current account is now different. Yeah, and what everyone used to take for granted is that's how that product works. Well, that's not any longer how that product works. It can work in all sorts of new and different ways. What is important is that you change and adapt and respond to that, but that you do it with a consistent, for me at least, you do it with a consistent ethos or ethic. So it doesn't really matter what changes come to your market. What is the values? What are the values that are driving your response to it? I have no idea what the tipping point on price is.
From sort of my business point of view, it depends on the business model. Within my business, there are several business models, so we will be working direct with Tesco to sell product, and we are the only insurer on that provide that product. Or we'd be working with the AA, and we'd be one of a panel insurers, and we have to compete with those insurers every time we need to get a customer from the AA, although the customer thinks it's always with the AA. And the way you, on that competitive panel, the way you get or keep a customer is to keep your prices down. Now, in our business model, customer service, good customer service, excellent customer service, keeps our costs down. So therefore, it keeps our prices down, and we win customers.
Right, thanks. So I think we've got time for one last question. There we go. That hand up went up very quickly.
Karen Martin, Legal & General. My question is very similar to the one about customer experience measurement, but I'd be interested to hear from the panel how you measure employee experience and engagement, and if you've got a headline metric for that you could share.
Shall I kick off?
Yeah, far away.
We have an annual survey, like a lot of organisations, that asks our employees to say what they think. So we call it Viewpoint, and every year, and then throughout the year we continue to measure, and we ask our customers to tell us how they're feeling. Our employees tell us how they're feeling. And it's something we take incredibly seriously. So it's absolutely embedded within the measures of us as a business and how we're operating. It's something that is really important that we can evidence to our teams that we take seriously, and that their feedback is valued and we'll do something with it. So we're just going through the cycle right now, actually, of getting the annual results and going through the action planning that we do with our teams as a result of that, and digging underneath what the scores tell us, and well, what do you really mean by that score? What's actually getting on your nerves? So you have to engage the teams quite actively beyond just doing the survey to really get underneath the root of what are their thoughts and issues and considerations. And we engage our teams in doing that. And then we all commit to action plans and work that through and keep the communication going with our teams. So absolutely, it's got a set of metrics. We then compare it with the industry. So we compare it with the broader market, we compare it with high performing groups within the marketplace, we compare it with financial services providers, and therefore we get a sense of how are we doing in terms of our employee happiness compared to others in the marketplace. And absolutely a key thing for us in the business.
Sure, that's probably
we can't have a philosophy of employee first, customer second without paying a lot of attention to what you've just asked. And so in addition to the annual survey, we have a trouble ticketing system in the company on a day-to-day, hour-by-hour basis, which any HCL employee can raise a trouble ticket on any part of HCL. There's an SLA between the company and the employee on how quickly that response has to be come to. And also, if the service levels are not met, they get escalated to managers, so statistics are kept on management escalations and so on and so forth. Interesting, that trouble ticketing system is actually very, very valuable in a secondary sense. Not only does it capture and help promote the trust, transparency, trust arrangement with employees, but it's also the earliest of indications of systemic problems in the business. Somebody once said to me, the least well-informed person in any business is the CEO, because everybody underneath that has tried to fix a problem before it comes to him or her. So this is a means of actually trapping possible systemic issues right at the earliest stages when employees experience them. The other thing we do is there's a blog and a portal on that everybody can use, which is called You and I. You is any HCL person and I is the CEO. So there's a direct dialogue between the employees and the CEO, and that also helps indicate what issues are being brought up by what we call Generation Y or the social networking. They won't put up with, you know, old conventional management diktats of how to work. They want to go straight to the top. And these things are in the thousands every month in terms of trouble tickets and You and I responses.
We do have, I think, biannual actually employee engagement surveys, which I think we call them. And I must admit to being a huge skeptic over what comes out of them. It tends to be the quality of the coffee coming out of the machine or whether I can park my car on a daily basis. I think far more valuable is to have a leadership team that actually talks to your people. And when they're used to that, they tell you things.
I'm minded to agree. We were just moving from an annual survey to a quarterly pulse, which is a random pulse, so it doesn't get sent to everyone. It'll get sent to, I don't know, 250 people every quarter. And I much prefer it because if you got really engaged team leaders and managers and then you put an employee engagement survey in front of them and you tell them you're not allowed to try and manipulate this, you're not allowed to try and get people to complete this positively, they will completely ignore you. Because as far as they're concerned, it's just another challenge, and I'd like to do well at this challenge. And so they're, you know, they all mobilize around, let's make sure the EE score is great this year. Whereas they can't kind of do that with this pulse survey, and I just feel an awful lot better that we'll get a truer read, good or bad. At least you'll trust the result a damn sight more than we do today. And I echo the point about engagement and having an open-ended dialogue with your people. So it's easier for me. I sit in the middle of the call center, and we don't have offices and all that stuff that a lot of organizations still cling on to. But one thing I do is we have two things. We have pies and ears sessions, we call them, or eyes and ears, where any team can ask to meet with any member of the leadership team on a monthly basis to have a chat and a pie. It's Yorkshire, you got to have a pie. And the other thing is we have would like to meet sessions. So I meet anyone who's recruited to First Direct in any job, which is probably, you know, a bit scary for them. But every time the coaching session ends, there's a lunch, and it's, you know, it's crisps and a sandwich. Frankly, it's to call it lunch is to do it a service it doesn't deserve. But it's just an opportunity to have a chat with people. And it reminds me, and I'll end on this, which is, for this question at least, is I met one of the co-founders of Innocent years ago, and he said something that has stayed with me about teams and about recruiting people and engaging people. And his wisdom was, it's better to have a hole than an arsehole. And I've never forgotten it. I thought it was a brilliant, brilliant insight into how you build a really strong performing team.
So thank you very much for a very engaging set of discussions.